Hello, Cleveland, and everyone from everywhere else. Hope that you're having a wonderful Sunday. The weekly candle close is tonight at 7 p.m. We'll make sure to take a look at the weekly chart today as well. We can project what's going to happen over the next coming weeks from that weekly chart. From the close of that weekly chart, we'll see what that does for us. All right, let's dive right in. All right, so we can see, you know what? Let's just start right on the weekly so that I don't forget, because I always tend to forget. So let's see what the weekly's doing. The weekly, oh man. Well, it looks like we're seeing a bearish engulfing candle here on the weekly, which is not a good sign. In fact, that's a sign that the next following week is going to be bearish as well. How bearish? Well, that's up to the bears and the bulls to fight out over. To fight over. But if we do see more bearishness, then we're going to be looking for that 94K level to hold, as we've talked about before. But we do have this fib retracement to look at, and we could go as far down as that 786 level on the fib retracement before actually calling this bull flag invalidated. Of course, if it gets under 94, we'll have to start adjusting the measured move. So if the measured move gets all the way down here to 77, 76-ish, well, then the measured move only becomes up to about 116. So yeah, I mean, it could still dump down to there and bounce back up, but more likely if it dumps down there, the likelihood of the bounce gets smaller. In fact, it becomes more likely that the bull runs over. But we'll only talk about that, once price action gets back under that 94K level. If we see that break under that 94K support, well then, we're going to adjust this bull flag and that measured move like we were just saying. And that's when we'll talk about more bearish scenarios. All right, back to the daily here. We'll brush out of there and let's take a look, see here at the 90-minute chart. We'll see that from yesterday, we'll get rid of this Fibonacci retracement. That one it no longer applies as we've broken out of that range there. Broken down out of that range there, but still, anyway, so this head and shoulders pattern we drew out yesterday played out to the downside just as we measured out. Not quite to the measured move, but hey, it still could get there. We're not seeing any bearish or bullish divergences. We're not seeing any signs that we're really going to turn around yet. Well, we are seeing one bullish divergence between the stochastic RSI and the RSI. You'll see that we are seeing slightly lower lows here on the RSI while we are seeing higher lows here on stochastics. So that means that, hey, possibly we'll see the reversal here on the RSI, a push up on RSI, and we are seeing RSI getting back over its signal line, which is a good sign. Not definitive of a turnaround, as you know, it can pop up over and then turn around. It has before. It does that from time to time. But it is over. In bearish territory still, under the 50, but it is over. So now what we would love to see is for the RSI to bounce up a little bit while the stochastics do run up to overbought. See price action run up a little bit, hopefully getting back up over that 99.6. What was support acting now as resistance here on the 90-minute chart. That hasn't been flipped to resistance here on the daily yet, but it is, it is there. If we do close the day under that level, then we could almost guarantee that tomorrow will be a bearish day further, and we will probably see that 99.6 level flip to support at that point. Let me just adjust this real quick. There we go. Bring that back up the way it was. You'll see that we haven't actually flipped it that 99.6 level to resistance here on the 6-hour chart either. So hey, let's watch the 90-minute chart, see if we can flip that back to support, see if price action can come back over, open and close a candle over, And hopefully we'll see that RSI come back up to 50. We could see it have a little straining at 50 and then come back down if the stochastics get into overbought territory and start curling back down before then. Now, what we're looking for, like I was saying, is for the RSI to pop up and then come down and form a higher high, and that while still allowing for price action to move a little lower to either finish off that measured move or to get some support from that 97.5 level, 97.6 level there, that local support level that's held up before and was resistance before and support before. But yeah, it's been there, it's held up before, so hey, maybe that'll hold up again. If it does, then we're looking at a double bottom, and hey, double bottoms play up most of the time, so we'll watch for that to happen. We can clear out this head and shoulders pattern now. I played out. We'll leave the measured move for now, just to leave it there for posterity's sake. See if it goes down a little further right to that measured move or not. But what we really want to see is for price action to find its way back over the 200 on the 90-minute chart. If it's over the 200, it's good. If it's under the 200, then hey, we're having some problems. And we'll notice the price action has actually come under the 200 here on the 6-hour chart as well. The 200 on the daily is way down here at around 77. So keep that in mind as well. 200 being one of those levels that if it crosses the 200, well, then that's some bearish news. When price action crosses the 200, it's either bullish or bearish, in whichever direction it's crossing. And especially if it crosses and then comes back and tests that 200 as support or resistance, depending on which way the move is going. Anyway, these bull flags on the daily and the 6-hour, they're still active, and they will be unless that 94K level disappears as support. Price action can break down under there. But till that happens, we're still looking at those bull flags and the targets of them. We just need to find a bounce point. The bulls need to find a bounce point, whether that's here at 97.5 or here at 98.5 or a little lower at 94. Well, that's up to the bulls, I suppose. But we'll see. We shall see. Yeah, we'll see how low it goes before the bounce, but I'm still fairly certain that we're going to see another upswing. I mean, what's telling me that isn't technical analysis, more so it's the fundamentals. Bitcoin, only a certain amount of Bitcoin are created or mined every single day. And there's a certain amount that BlackRock and all the other ETFs, and if the U.S. government starts buying, and El Salvador has been buying, and other countries have been buying, and a bunch of companies have been buying, MicroStrategy, other companies are talking about buying. Well, that's a lot of buying, and that's not a lot of Bitcoin mined. Like, way more is being bought than is being mined. So what's happening? Where are they getting this Bitcoin? Where could it be coming from? Well, they're trying to buy, not on the open market. They don't want it to swing the price a lot and screw themselves over. But so they're buying it over the counter. But how are they getting those Bitcoin over the counter if the exchanges have the lowest amount of Bitcoin that they've ever had? Well, the exchanges must be, getting it over on the open market. Just, manipulating the price in such a way that they're not moving it like massively and causing panic to the downside or euphoria to the upside. They're keeping it where they want it until they're ready, until their pals have loaded up their pockets, and then when that happens, they'll let it rip. They'll let it rip probably up to that 115 target or, higher up to that 130 target. But we got to find that bounce. Will it be this week? Will it be next week? Will it be this month? Will it be next month? According to the TA, 115 figure is looking like February 8th, hopefully. And then, like we've talked about before, St. Patty's Day for that 133 figure. All right. Don't really got anything else to say. No obvious patterns on the 90-minute chart. The indicators could show some bullish movement coming up, but they are all rather low, and the higher time frames are showing some more downwards momentum than upwards momentum. There's a chance for a bounce according to the indicators here on the 6-hour chart and the 90-minute chart, but there's also a chance for further downside. 50-50 for today. Can't really tell you where it's going. It's also Sunday, so I wouldn't recommend trading. It's low liquidity. Not a lot of other people trading. Market makers see your orders, your stops, your liquidations, and they'll go for them. They'll stop hunt you. All right, I got nothing else. Thanks so much for watching. Music courteously provided by Veloa, Luminist, and Sag Squatch. Much love. See you later.